Hello, dear traders. This is Alexander Gerchik with the Gerchik and Company, and today we're going to have a webinar about TIMA traders. The most important thing that we're going to talk about, how to present yourself right, how to basically follow your strategy. So this way, investors will invest money into your TIMA account. Just to put yourself to hold on for a moment and understand how it works, I want you first imagine yourself that you are not a trader, you're an investor. So the bottom line is, if you're going to feel like an investor while you're a trader, you will understand all minuses and pluses that investors are looking when they invest money into the TIMA account. The most important thing, try to figure out one thing. When you give money to somebody, figure out this. You have to trust this person. You have to understand what this person is doing it with your money. And if something goes wrong, and a lot of times, it goes wrong, what it's going to be and how you're going to behave yourself. And the most important thing, how the person who invests money in you feels secure. Before we're going to go to some presentation, I'm going to show you today my presentation. I basically, when I was running the money for the clients, and we present our customer with a presentation for everybody to understand what exactly we're doing. So I'm going to show you my presentation today. It's a little, pretty much, it's a fresh presentation. So I hope you'll understand what exactly we're doing and why do you need. As I said before, what the investor is looking for. Figure out one thing. The first, investor would never put money into the bad company. So basically, in this case, you feel very safe because the Gerchik and Company, it's extremely good company and the people are feeling very safe. So that's the good part. You have nothing to worry about there. Second thing, what the people are looking for, it's for how many years, how many months you've been running your TIMA account, trading account. If it's a beautiful part, 300%, but it's only for 3 months, people are not going to feel secure. So the first thing is for how long you've been running your account. If you had account somewhere, make sure you show your investor that you had an account before and you run it very well, let's say a year or 2 or 3, because the most important thing, people look at time equal stability. That's the most important thing. Second thing, obviously, the people are going to see how much money did you make for them and what was the drawdown, just for you to understand. If you make 30% and the drawdown is 20%, investor is not going to like this. Is not acceptable, and the people don't like this. So drawdown to win ratio has to be at least 3 to 1, 4 to 1. So for example, if you lose 10%, you can make 30 to 40%, because don't forget, you're still splitting with the investor the money that you're making together while you take no risk. So the people has to be extremely understand and happy with you to show you great returns. So you understand, if you make 30% and you work with the 40% with the investor is going to get 18%, you're going to get 12, and investor is not going to be too happy with that if the drawdown is going to be 10%. Very important thing, it's the curve, your curve. If the curve basically it's go up and down, people are not going to like it. I'll explain for you why. I'm going to show you today a few examples of some TIMA accounts, and if person see that there's a drawdown of 30 or 40%, he's going to be scared. I'll explain for you why. Obviously, if let's say some account made 300% before and I had a drawdown of 50 or 40%, it's not a big deal. But can you believe it? What the investor is going to ask you? What if I got all the way at the top of the curve? I can lose this 30 or 40%. So this is another part. So you got to go slow in the beginning, can build. And another very important thing, extremely important thing. This is the number of investments, number of investors, and number of the dollar that you have in your TIMA account. You should understand one thing. If you have only $10,000, you should understand one thing. The big trader within $20,000, $30,000 is not going to come to your account, because he doesn't know if you ever trade this kind of money, and he's going to be very insecure of investing into you. So the most important thing, it's built slowly, that you're going to have plenty of money and you can attract the big investors. If you have a $30,000, $100,000 investor is not going to come and invest money into your TIMA account. I just told you a little bit of everything, and right now I'm going to show you my presentation, and I'll explain for you what happened. And you'll understand that the very important thing between your relationship, it's your transparency. You have to be clear and clean on everything you present to your customer. The customer has to see everything, and he has to understand that what it's all about. If the customer does not understand, you're going to have no investments. So a very important thing when you're going to build your presentation is to present to the customer what you trade, how you trade, what's the holding period, what's the loss per position, how many maximum losing trades you can take a day. It's got to be everything and anything. So the most important thing, it's got to be full transparency. Once the client is going to see that you open, he's going to feel comfortable with you. Very important thing, you got to have your contacts. The client has to have either your Skype, either your email, either your phone number, whatever you want to give to the customer. Because when the people know who they're dealing with, they're going to feel comfortable. If they don't know who you are, if they don't know how you trade, it's nothing you can do in this case. So basically, full transparency, everything it's got to be in the picture. They have to understand everything. So right now I'm going to show you my monitor so you'll understand. This is the my presentation, and I'll go page by page so you'll understand what it's all about. First of all, as you can see, people who understands about the market, and I want you to know one thing, not a lot of investors do understand everything about the market. So if you explain to them, they're going to feel comfortable with you. So right here, you can see right away what kind of strategy. This is a market neutral strategy. Second page. That's exactly how we trade. So we explain person what he's looking for as far as the percentage and the strategy. You see, behind the strategy is scientific research and options. So what it is, we took the options, analyze the options, and then basically project them in the stock, and then we make our decision. So in this summary, you have to put how you will trade account, what is the odds, and how you basically you will do it with the investor accounts. He has to know what's the strategy, what's the maximum loss, what basically you count. It's got to be everything. The strategy is developed exclusively by our team, so you can say either you took somebody else's strategy or this is your own strategy, which is fine. But in this page, you have to explain the customer how you will trade his account. What is the strategy behind? That's a very important thing. If you're going to just say, I trade on a technical analysis, this is not enough of information. And if you're not going to give customer enough information, he's going to feel insecure and you're not going to get the money from it. Everything you understand that you're not going to transparent to the client, it's going to create misunderstanding or insecurity of investing into your team account. See, key moments. You have to explain to the customer what exactly you do in details, because don't forget, some customers are not well educated, and if you think you're going to put a trade technical analysis, it's not going to be enough for a lot of customers. So right here, client's portfolio consists of long and short position equally. Profitability does not depend on the general market moves. So we shows here what we're trying to show to the customer, that since we're trading long and short, if the market goes down, we make money. If the market goes up, we make money. If the market goes sideways, we're still making money. So the client know one thing for a fact, because most of the time they're asking a question: if euro is going to collapse, what's going to be with your account? Are you going to lose money? No, you're going to say, no, I'm going to make money because, you know, I short and I go long. If euro is going to break, let's say $1.09 or $1.08 or $1.07 or $1.06, I'm going to be in a short position, and then me and you, we're going to make money, which is going to make a client very happy. There is a wide diversification of 130 stocks in the portfolio, long or short, so no risk at single stock favor. In your case scenario, you have to say that you trade most of the currency pairs, let's say 10 or 15 pairs, and you explain customer which one, dollar, euro, make sure you don't put a Norwegian krone, so this way the customer is going to know you're only trading. You see, we put it here, only large caps are included. What does it mean? The client knows that we're not going to trade stocks with a big spread. Same is here. If you're going to put currency pairs, which is exotic, and they have a big spread, the customer knows he can lose much more money. So the most important thing is explain exactly what you trade and how you trade. We had one trader who's an investment advisor, and the problem that he has, he only trade one single position, euro, And a lot of customers, they don't like that. A lot of people say, wow, it's nice. He knows the material. He knows everything. And if he's going to trade one instrument, that's great. Not always. Sometimes when you trade one instrument, people know there is a problem. And this person, if something is going to go with the euro and the euro is not going to move, he knows one thing for a fact, he's not going to make money. So you have to explain to people what exactly you do. As you see, the money are always available for investor, no freezes like with the midterm strategy. That's what I put. You have to explain the customer what's his holding period. 1 day, 3 days, 5 days, 1 month, 2 months. The most important thing, put in detail exactly what's the holding period. Because if the person needs the money or he knows that everything is fine and the money is available, he's going to feel comfortable. If you're going to say holding period is 1 year, it means you can lose 30 or 40% of investments and basically hold money, and the client is not going to be able to take the money or take the money with a penalty. And nobody wants to pay penalty. You see, as we said before, our strategy does not imply optimization parameters, so we don't have no optimizations. It's a pure trading market. So basically, we put everything here, just for you to understand, guys. The more details you're going to provide to your investor, the more comfortable he's going to be basically feel with you, and the more money he's going to invest with you. Let's go further. Both long and short sides are better weighted in portfolio. So we're saying that's, it has nothing compared to you, but we trade weighted portfolios, so the client customer is not to worry about. Okay. Numbers, very, very important. You see is right here, equity curve. This is equity curve right here. You see equity curve from which day to which day. So the customer basically can figure out what's the drawdown. But even here and this, it's not enough for the customer to make a decision. So that's why we explain it here. Just understand one thing. A lot of investors, they feel themselves like they don't know anything about. And this is your job to explain every single detail so they'll understand and you will not have any worries of what's going on. Results are after commissions. Perfect. So the client know basically the number that he sees here, they've been after commissions. Because if you see here, customer can say, oh, after we split the money, after I make my part, I'm not going to make anything. No, Mr. Jones, you will. During the trading period, maximum drawdown was less than 4%. And he feels already comfortable because take a look. On the strategy, we put maximum drawdown is 7%. So he understands one thing. Even though we put 7%, the only problem during the trading period was only 4%, that the client feels comfortable. The equity curve is a result of 50,000 trades. So the client knows you did trade a lot, and this is not a coincidence. The money that you make, this is simply because you're a professional and you know exactly what you do. Then, as you can see, results by day. So the customers already see that the biggest day winning day was a 3%, the biggest losing day was less than 1%, so he feels comfortable. He can see there's a lot of times he has a big winning streak, and it's not that many losing streaks. So the customer can see it here day by day. You see, the more information you provided, the more comfortable. And even here, you see, you don't have to give a customer a clue that he has to figure it out himself, what's going on here. You see, the customer has to see the numbers. The numbers are simple. It was 364 trading session, so a little, almost a year and a half. Losing session 138, winning session 226. Here, you see, we might not put in the winning number days, but we'll put a number the customer doesn't have to think about. Oh my God, okay, 364 minus 226 equal. No, you have to do the job for the customers because they're your bread and butter. They're the one who gives you and pay you the money. So you have to figure it out what's exactly is going on. Average daily loss, 0.23. Average daily profit, 0.36. So he knows on a losing day, you lose less than you made. The worst losing day, you see, we put it here, minus 94. The best winning day, 0.3. So he sees all the numbers and he starts to feel comfortable. They make an average every single day more money. If there is a worse day, it's always 2 or 3 times smaller than the best winning day. Maximum stream of winning days, it's 12. So he knows one thing for a fact. 12 days in a row you can make, it's only 6 days in a row you're going to lose. Sharp ratio, you don't have to come up, but the people know who knows the industry, they know sharp ratio is extremely smart and known well factor. You see right here, the strategy basis. We put everything in details against the strategy. You don't have to take whatever we did. You have to explain to people what you do exactly. You see how it works. Here's the details. That's what we do. And obviously, what we do and how we do it. You see the strategy basis and then how we do it. The more information, the more explanation you give to the customer, the simple it's going to be for you. Now, you see, we bring here the all results. So the customer sees this is a real account. Customer knows because he can see right here, you see, that this is a real account and this is a real account. This is a printout from a broker. So the customer can see. First of all, he can see right here. That's in a he could have made 6%, and this is the benchmark in a 1 month from a January. You see, for almost 1 month, just a little over 1 month. That's what he can see. First of all, second thing he can see that if market would do nothing, and you take a look, market did nothing. Take a look, zero. He could have made money. You see, and this is account, and this is the S&P. That's what it is. Then he can see the total changes day by day. Now he can see what we trade. This is the real presentation of the portfolio. So the customer is going to see that we trade only good companies: Bank of America, Apple, Walt Disney, Facebook, Federal Express. He feels comfortable. He knows one thing for a fact, that this is the beautiful part, and you don't trade shit. Right here, you see all the trades are done through the company and everything else and your information. So the most important thing, he is going to see the information, and very important thing, he's going to feel comfortable with you. Now, my friends, I'm going to open something for you, and now we're going to go and see a few traders. And hold on 1 second, we'll go to English side. Okay. Now we're going to see basically what people are buying it and what people are liking it. Take a look. What we have here? Okay, active investor 58. So you know, let's say average investor almost $3,000, which is great. You see. Second thing, as you can see, he goes extremely well, and the only one issue in this account, there's not enough of statistics. It's only 6 months of the statistics from June, but the people like it because one simple reason. You see, the return is big and the drawdown is small. So basically, people like it, and you can see all of the traits of this guy. Take a look. Very important thing in the descriptive strategy. The beautiful part is trading strategy associated with the release of macroeconomic events and errors of analysts, which leads to an instantaneous sharp movement in the market. So he explained that he trades the news. Direction of the trade in opening of the orders is strictly in direction its analysis error and comparing the actual figure. Success ratio is more than 90%. So what it is, you open what this gentleman is doing it, the way he's doing it, and you, as you can see, you understand every single move of this gentleman, every single move. You see, that's the beautiful part. Now you can see his offer, what he's offering to you. You see how many percent he takes in the big accounts, email, you see. So you understand everything about this guy, and you can make a decision exactly to invest or not to invest. Let's go to the another person. You see very big numbers, everything is fine, it's great, you see, but the people is gonna people are gonna see this, and they're gonna ask the question, why he didn't invest? Probably he did not trade. They started to trade in July. From July, it's almost 300%. It's a huge number, but everybody's gonna see this. And this is about 60% drawdown, almost. You know, and when the people is gonna see this, maximum drawdown is maximum drawdown is almost 40%. And when people are going to see this, they're going to ask a bunch of questions. But when you make 300%, it's very simple. You can basically on this drawdown, make a lot of money. In order to finalize everything, I want to tell you one thing: what our investors are looking for. As I said, time for you, time of your work. I mean, how long do you invest? Second thing, how much money you have under management. Very important thing. How much of your personal funds do you have? It's a very important thing. And very important thing is they're going to see for the sharp equity. The equity is going to be sharp. You know, if you go up and down, people are going to afraid, because if you come at the top, you can create a problem for yourself. Anyway, if you have right now questions, I'll be more than happy to answer all of your questions. And right here, we'll wait a few minutes for the questions. Take a look on our presentation. And if you have any questions, you can write it to me at a.gerchik.com, and I'll answer all of your questions. Otherwise, as I said, I don't like big webinars. I don't like a very long webinars. I like short webinar. But the very important thing, I'm trying to bring it out to you so you'll understand what exactly we do. It's been Alexander Gerchik and Gerchik and Company, and we wish you all the best. And today I told you about how basically and what it takes to attract the customers. Thank you very much.